$11,000, that is all this took. $1,000 every January, starting in 2015. No leverage, no day trading, no secret signals, just buy, hold, wait. Today, that $11,000 is worth $606,000, but the right to get there, that's what nobody talks about. The rules are simple. $1,000 invested in Bitcoin on the 1st of January every year, from 2015 through 2025. 11 purchases, $11,000 total. No market timing, no selling the tops, no panic buying the dips. We used CoinGecko historical price data for the January 1st opening price of each year. One more thing before we start. Bitcoin is one of the most volatile assets in financial history. This is not financial advice. This is a look at what the MF actually shows, nothing more. Now, let's run the numbers. January 1st, 2015. Bitcoin is trading at $315 per coin. The mainstream media has declared it dead at least twice. The price has crashed over 80% from its 2013 peak. You put in $1,000. That buys you 3.17 Bitcoin. Nobody wants it. That's why it's cheap. 2016. Another January, another $1,000. Bitcoin is at $430. You pick up 2.33 more coins. Running total, 5.5 Bitcoin. Total spent, $2,000. January 2017. Bitcoin just crossed $1,000 for the first time. Your $1,000 buys exactly one more Bitcoin. Running total, 6.5 Bitcoin. You have spent $3,000. The portfolio is worth around $6,500, already more than double. But the real move hasn't started yet. January 2018. Bitcoin hit almost $20,000 just 3 weeks earlier. Your $1,000 now only buys 0.075 Bitcoin, but your stack of 6.5 Bitcoin from the cheap years, at this price, it's worth $80,000 invested. You put in the 1,000 anyway. Then the bottom falls out. By December 2018, Bitcoin is back to $3,200, an 84% collapse in 12 months. Most retail investors who bought near the top have sold, many at a loss. Your paper gains have evaporated, but your cost basis is still just $4,000. January 2019, Bitcoin at $3,689. You put in another 1,000. 0.27 Bitcoin added to the stack. No celebration, no panic, just the next purchase. January 2020. Bitcoin dollars. In March, Bitcoin drops to $4,000. But something changes. The Federal Reserve floods the system with money. Stimulus checks hit bank accounts. For the first time, institutional money starts seriously entering crypto. MicroStrategy, Square. PayPal enables Bitcoin purchases for 346 million users. The macro environment has shifted, and Bitcoin feels it first. January 1st, 2021. Bitcoin opens the year at $29,001. Your total stack is 7.02 Bitcoin, worth over $203,000. From $6,000 invested, Bitcoin then runs to $69,000. Your portfolio briefly touches nearly $500,000 on paper. Then comes 2022. January 2022. You buy your 1,000 at $46,200. Then Luna collapses in May, $40 billion wiped out in 72 hours. Then Celsius freezes withdrawals. Then Three Arrows Capital. Then in November, FTX implodes. Billions in customer funds gone. By December 2022, Bitcoin is back at $16,500. Total invested $8,000. Portfolio value about $112,000. Still 13 times the money you put in. But every headline says it's over. 2023 starts quiet. You buy your 1,000 at $16,547. The market barely moves for months. Then in January 2024, something changes everything. The Securities and Exchange Commission approves 11 spot Bitcoin ETFs simultaneously. BlackRock, Fidelity, Invesco. Within days, billions of institutional dollars begin flowing in. You make your January 2024 purchase at $42,265. In April, the fourth Bitcoin halving reduces new supply. Demand outpaces supply. By the end of 2024, Bitcoin crosses $100,000 for the first time. January 1st, 2025, your final purchase. Bitcoin at $94,000. 11 purchases complete. $11,000 spent. Total Bitcoin accumulated, 7.14 coins. At today's price of $85,000, $606,807, 54 times your money in 10 years. $600,000 looks easy in a chart. It was not easy in real time. You held through 2 separate 80+% crashes. You watched your portfolio lose over $100,000 in a single year. In 2022 alone. You held through FTX, through Luna, through every headline that said Bitcoin was finished. Research from Chainalysis shows that more than 60% of Bitcoin holders who bought during the 2017 bull run sold during the 2018 crash, most at a loss. The strategy here is dollar cost averaging. Fixed amounts, fixed intervals, no emotion. It does not guarantee returns. No strategy does. What it removes is the pressure of trying to guess when to buy. With Bitcoin specifically, every 4-year holding window since 2012 has ended higher than it started. That is a historical pattern, not a promise about the future. Regulation could change, technology could fail, new competitors could emerge. But for investors who understood what they held, who understood the volatility they were signing up for, and who could actually stomach it, the math has been extraordinary. $11,000, 10 years, 5,400%. Discipline was the investment. Next, we are running the same simulation on the S&P 500. Same rules, same years, same $11,000. The result might surprise you. Subscribe so you catch it. Every dollar has a story.